Mr. Sanjay with a quote which he very often say is that I'm not addicted to funding startups. I'm addicted to working closely with the startups and entrepreneurs. So over to you, Mr. Sanjay. I look forward to a solid session and hope that people also get some value out of it.
Hey, thank you, Ashish. Hope you guys are able to hear me. Let me just make my presentation live. Just give me a moment. The topic today, what I'm going to speak about, is about how to build a sustainable and fundable business. Now, there is a difference between a sustainable business and a fundable business. Sustainable businesses are where you are growing on a steady rate and you are, getting the what do you say, predictable revenues, right? And fundable business is where you are exponentially growing, non-linear, and your opportunity over there is very different. So what kind of business attracts venture investing, right? So first and foremost, if you are only a sustainable business, it will not be attractive to VC, kind of. So VCs look for growth, VCs look for velocity, VCs look for non-linear growth, exponential growth. So these are all the adjectives which typically VCs get attracted to. And whenever they see across accelerated businesses or high growth businesses, that is what VCs would attract across. Now, in the current times, there have been situations where funding is dried up. There are challenges in terms of raising funding. So you need to sustain your business. So first and foremost, your business has to be fundable. If not, then it's not VC attractive. So what are the things which typically a VC looks across? And sustainable. So while you are building your business, how do you ensure that if there are no future funding rounds, your business should not die, or ideas should not fail? So let's try and delve into it. Whatever best I can help you in terms of how we work across. First and foremost, let me just give you a brief. While I was doing my own personal investing, now crossed a portfolio of 150 odd companies, not 103. Invested in India, US. We have a US-based fund in Delaware, but that is more specific to investing in US companies. In India, we have a SEBI-registered fund called 100X.VC. And the reason why we started was, my experience in Indian investing. The time to close a deal was very high. So we wanted to do something where we can invest very quickly. We believe that, entrepreneurship is tough. Building a company is very hard. And how can we simplify at least one part of your process with entrepreneurs by simplifying the funding, at least the capital side of it? So we started across 100X.VC, very small, lean team. And we invested in our first class. So we work on a class mode. We invested in a first class of companies, 20 startups. So this was, which we did it in last December 2019. This shot is at IIT Bombay, where we showcased it to almost 500 odd investors. And these are our first set of 20 startup founders whom we invested into. What we look into while we invest into startup is, founding team, what's the right to win, what kind of market opportunity. This is something which is very important for us, where, your market opportunity has to be large enough for VC investment. What kind of business model strength you have? Do you have a path to profitability? While you might not be making money today, but tomorrow you should be able to have a path to profitability. What is the business model strength once it is covered across? What's the unfair moat? What's that unfair advantage? What's that barrier to entry that you have a lead that other people will not be able to catch up, and you can maintain a leadership position? And when we invest, we look at our internal conviction. It is not mandatory for founders, but this is our internal conviction, saying that, minimum of 20x return, kind of. So can this business become very large to happen that? what are the four things typically we look into any of the startup, right? So first one is this a fundamental innovation, right? You as a startup founders, what is that fundamental innovation which leads to that market disruption, right? So is this ground up, which you are trying to innovate a thing, which is ground up a tech which you have built across? So what is that, fundamental innovation? The second is this something where a good technology trend is showing up, and you as an entrepreneur are leveraging that technology trend, and that leads to the product creation. So many times, once you have a great fertile technology trend which is happening, it helps us to build the product, right? And we have seen so many examples. So for example, if GPS as a technology would not have been there, we would not have seen Ola, right? So that's where I was meaning. And then is there any market gaps which is leading to product innovation, right? You see a specific market which is possible across, and which we saw across in the current COVID times, telemedicine and stuff. And the next is industry gaps leading to product creation. And we see across a vertical where, the huge amount of gaps are there within an industry from an IoT. We have seen across so many industry gaps which are there, and the improvements happen and leading to product creations. We implemented or created something which is called iSafe, which is India Simple Agreement for Future Equity. So if you are raising funds and you want to simplify it, you can go to 100X.VC website, and you can download this iSafe agreement. It's a very simple founder-friendly agreement. Where there is no valuation discussion. We don't get into valuation discussion. We just buy a right to the equity, saying that in future, whenever you grow, you have to give us the equity for the capital what we have invested. So iSafe is become very popular, and you can look upon 100X.VC website. No legal cost. It's a template. You can download this iSafe free of cost and use it across for your purpose. And if you're working for 100X, iSafe is very, very valuable. You can check out videos from my partner Yagnesh, multiple videos on iSafe, how it works, why it is valuable. Then a draconian shareholder agreement, which takes away so many rights, and you get binded kind of with investors. So look upon that, and it would help you. Class 2, the next batch we would be announcing on 18th and 19th of September. That's our VC pitch day. So with another set of companies which we would be taking up. Class 3 opens. So we have now new class opening, fresh batch, fresh set of companies we are looking at. In case if you are looking to raise funds, send out an email to pitch@100x.vc. And that's my Twitter handle @Mehta Sanjay, in case if you want to share some comment on this session or otherwise. So we welcome across class 3 startup founders who would like to pitch to us, and please ensure you send us our complete investment details. Now, coming to the topic, what's happening in the world and what are the things you should be doing and not doing kind of stuff. So let's look at this VC funding data from Crunchbase, right? And this is the first half of 2020, first 6 months, how the venture funding, global data is played out. And if you look into it, almost the 19.4 billion, which is there for India, that is coming across while our COVID case, and this is with reference to the COVID-19 cases, right? In this current times, what's the funding? So there is a correlation here, but I mean, just to understand across this whole 14 billion kind of difference or growth is all because of Geo. Geo has taken away the largest chunk kind of stuff. So that's the India number of deals with and without Reliance Jio. And so the point what I want to make is the activity is happening. Outside of Jio also we had 600 odd deals. So the investments are on. People are investing. There was a pause, maybe in February, March, where VCs were looking at their existing portfolio and trying to see how they can build a runway so that unknown or uncertainties are taken care. But overall, if you look into it, the activities are happening across on the India side. What is in the mind of investors with this COVID-19, right? So what are the things which investors are looking across? So one is, there's huge amount of market dislocations which are happening. The consumer behavior is changing. If your startup is able to take an advantage of it, then please talk across. It's a very, very valuable opportunity here. Then founders, so every time a VC pitch is happening across, founders are made to talk about, pitch before crisis, after crisis, and whether you as a founder have been able to turn your setback into springboard, right? So this is something, this was uncertain, this was unknown. But entrepreneurship is all about, overcoming that unknown and uncertainty. So you as a founder, were you able to take that up kind of? And so you should have 2 slides in your pitch deck: pitch before crisis and after crisis, what business impact it happened and how you overcome it. The next is disruption and opportunity, kind of, do you have that growth mindset? How did you pivot? Did you change your business model with the COVID impact? This is a time where extreme focus is required. You need to question every spend, question everything, all the processes which you are having across, and how have you used this pandemic to your advantage, kind of stuff. And the growth, not a mindless growth, but growth plus profitability is required. And we'll discuss that in a coming few slides in terms of fundable and sustainable business. And so valuations are now through value creation, not just a kind of idea. And your go-to market is going to be very important in these times, where you can explain why you are valuable to your customers and why they should continuously buy or be loyal to your product or brand, kind of stuff. And today the advantage is, most of the acceleration which you wanted as a founder, everybody wished for this time where consumers are adopting technology left, right, and center. So your acceleration, of business has to happen, because if you are a tech-driven startup, then this is the best time possible you can take across. Time and money maximization. This is a time where you want to leverage, get the best buck out of your best bang out of your buck, kind of stuff, and take that stuff off. Right now, if you have got cash, this is the best time to hire talent. There is less competition. Even the cost to acquire customer has gone down drastically. So that's huge, kind of stuff. And this is a time where founders need to command and control lead from the front. And on the valuation sides, right, when you are pitching to investors, you try to meet expectations. These are not great times where there is an accelerated mode of business which is happening across. So try to map your valuation expectations also right now to engage. So these are some of the thoughts which are running through the VC community and investors in India. We believe, building a startup is very hard. If you are a first-time entrepreneur, it is tough. If you are a first-time startup CEO, then it is tougher, right? While CEO has a responsibility, very different, kind of. So if you're a first-time startup CEO, it is tougher. And if you're a first-time VC-funded startup, then even being a CEO of that company is toughest, because now you have investor relationship. And I sincerely believe, because I've been an entrepreneur, I've built 2 software companies, built, exited. I believe entrepreneurship is the hardest jobs in the world, and the second one is staying happily married, kind of stuff. So that's where I look upon. Entrepreneurship is a very disciplined and a rigorous process, right? You need to be running a startup, is all about speed, learning, focus, right? You need to be very laser focused. And building a startup is all about testing a vision, right? By measuring customer behavior and how customer behaves. It's just trying to, how do you map your theories or thesis kind of stuff. The next is, when you are scaling a company, it's all about engaging customers while you are building your product, right? So you want to build something what people want across, right? And if you're a VC funded or looking to get funding kind of, then you need to scale rapidly, both on a product and market validation. And we'll talk about product market fit kind of in parallel with short iteration. So it's like fail fast, fail forward, kind of stuff. So this is in nutshell questions which you need to be ready to build a fundable and a sustainable business. You may want to take notes now in terms of which are the questions you need to be very ready across to be answered by the founders. The first one is, what's the reason for your company's existence, right? Why are you building this company? Do you have that clear definition of your product or service? What's your elevator pitch, the value proposition, the mission? Is this product which is already developed, or can it be developed, validated? So what is this reason for your company existence, right? Overall, you need to have a great story when you are talking across to VC. And besides, pitching to VC, this has to be something which you believe into and why you are building this company. Next is, imagine where you could be, right? What's the potential? What's the market size next 5 years, next 10 years? Where do you think, what's your addressable opportunity? What's your focus? What is the positioning, segmentation, kind of who is going to be your customer, right? And is this market large, rapidly growing? Anything which is going to be very, very rapidly growing is going to be a very attractive market for many of the investors. So if you see e-commerce, why so much value or money got invested into e-commerce? Because the market was humongous, and still it is just scratching the surface. So that's how, if your market opportunity is growing, then people would invest across. Then why do your users, customer, people want this product of yours more than any other product in the market, right? Is this painkiller which sells by itself, or this is vitamin, right, where you have to work hard to change your habits, kind of need to have, nice to have, whether it is fills the vacuum, non-linear, does it have that non-linear growth, virality with velocity, why is this product or service necessary? Is this something different or differently being done? So, so what will happen across? Why would your users need this product more than any other product in the market? So this is going to be a very important question which you need to ask. Why is your one team to do it, right? Why is your team? What's your right to win, right? Team is very fundamental. What's the track record? What's the kind of team composition? What kind of advisory board you have? So this is going to be very important while you are pitching across. So founders' right to win is very important for VCs. Why is this right time to build startup, right? Timing is so important, right? Economic impetus, better way of doing things, right? Right now, for example, in EV business, there is huge amount of economic impetus given by government, right? So there is much more incentive to go across. What is the enabling technology, right, which is helping this innovation? Cultural acceptance, right? Reprogramming of, like, for today in COVID-19, the consumer reprogramming or change of behavior has happened drastically. Right? So how do you look at it? So while we spoke across of GPS as a technology which enabled Ola, very similarly, online booking of travel which started across with Make My Trip, and the enabling technology where I could aggregate all the flight details, that created the whole new business opportunity, right? Has the market validation happened? What is the experience of your pilots and prototypes, right? So these are all the things, right? Why you should be able to talk to your VC or investor when you are pitching across, and including yourself, because timing is very important for any startup success, right? If you are ahead of time, then also things don't work across. I remember one of my mistakes in the .com time. I built an online accounting software, and it failed miserably because in 2000, in a dial-up modem, creating a SaaS, that time it was called application service provider. SaaS model didn't exist. So, and I didn't have enough capital at that point in time to sustain my business. So it just waned away. So idea is timing is very important kind of stuff. Understand where you are now, right? So what is your metrics measuring your traction, the capital you need to scale. Many times people, underfund themselves or overfund. So you need to arrive at, so the method to arrive is, next 18 to 24 months, how much capital would you need? Or work on a metric saying that if I achieve this number of metrics or attraction, then I would be able to raise the next round of funding. So what kind of capital you would need across to scale, and within team. I mean, if you have gaps, every team has got holes, VCs understand, but identify those competency gaps whom you would be hiring. When will you break even is very important question which you need to be ready across. What is your own investment? What's your own skin in the game? What kind of funding you have received till date? Investment and valuation expectations. So these are all the things which you need to be ready across when you are meeting an investor. The next one which you need to answer across, right, for you to create a sustainable business is why isn't everyone working? If this was a breakthrough idea, an idea is not like somebody's monopoly, right? So idea is, why isn't everyone working on this idea? What's the competition? Know your landscape very, very well, understanding competition. What's your unfair advantage, your moat? What's that entry barrier so that people will not be able to come into your space and you shall be successful. Next is, why will you better do than established big boys in the corporate world or established well-funded startups, right? What's your execution plan? What's your delivery model? What's your go-to market, distribution, sales channel, right? So what is it and how you would be better than your established players in the market, right? So you need to be ready with this answer. Next, which I see across very, very closely is, most of the time, entrepreneurs pitch their product, not business. And VCs want to invest in business, not product. So for example, when I hear a pitch saying that I built 128-bit encryption, so what? मैं क्या करूँ भाई? तुमने 128-bit encryption बनाया. It doesn't have any value for me, right? So idea is, when I ask a question, so what, the founder will come back and say that this is security is unbreakable. My next question is, so what? So it can transfer, valuable credit card data safely. Now this is where the product is now converting into business. This is for which a customer will pay money, right? So tell about a use case, not how your technology works. I don't need to see a product demo. That can come later. But idea here is, what a VC would look into is, does this have a business case? इसमें पैसा बने या नहीं बनेगा या नहीं बनेगा? Will customer pay for the product? I mean, the solution which you have created, right? So convert your product into business is going to be very, very important. Customers don't care about your solution. They care about their problems. Are you able to solve their problems? Now, this is where this changes across from, focus purely on the VC side to a sustainable business. Once you have this mindset about continuously focusing on customers, where your revenue generation, your product is purely focused to solve problems for customers, then you are successful. And there is a term which is called, product market fit, and that can achieve only once you are customer focused, right? So this is the magical moment when you become a sustainable business, right? The three things happen where your existing users recognize your product value, and they feel like they can't live without the product what you have created. Then they talk about the great experience with your product, saying that, oh, I use this product. Did you use this? And you WhatsApp, you talk about it when you meet your friends or family, and it's a word of mouth which happens. And your company, your startup replicates that same experience for the new user, right? So the idea here is, when your customers become your salespeople, that's where the magical moment happens. Now, is this going to happen, by itself? How do you create that virality, word of mouth, so that people talk about your product, they love your product, they want to recommend it, is something which is important, right? So this is a value hypothesis, and I love this quote, right, in which when a great team, right, meets a lousy market बहुत खराब है, but the team is there, still the market will win, right? And I'll give you an example of it. Irrespective of whether you are a great team, but if the market is bad, then the market wins. When you have a lousy team, right, not a great team kind of stuff, and not an ace guys, but the market is great, then also market wins. But when you got a great team and a great market, something magical happens, right? Something special happens. So idea is you need to have the right product and the market for it, right? And that value hypothesis we will see across how in multiple iterations, startups find their product market fit and they become, sustainable. So let's say an example where you have a market of, you talk about dog food, right? And dogs are eating the dog food. Even if you have got a bad team kind of stuff, because dogs are eating the dog food, you will succeed. But conversely, if you have great execution, great distribution, but dogs are not want to eat the dog food, right? There's no chance of winning. So market has to be there. If you don't have the market, the success will not happen across. The next, let me give you, this is one of my portfolio examples, right? And a company called Boxade, which is into QSR restaurant, right? And when we invested into it, we invested 25 lakhs, the first check kind of stuff. And that time they were doing a business of Mexican food called Poncho. And, while we thought across Mexican food, very similar to Indian, it will work out. But customer mind was not about, chalo aaj Mexican khate. So it never flew off. And then the startup pivoted themselves to Box8, where they created an Indian meal, which is, eatable in a box with a spoon and a fork. And that just took off, right? And this company grew, Box8. So it's all about iteration, understanding the product, what is receiving, build that business model and scale that up, right? So this is how you work across. So this is one of the sustainable business and fundable business which happened across. So you can think like a product market fit, like how sailing would be, right? Where, your product is the sail and demand is the wind. So if you have that, it just works across very, very nicely for you to raise money. So just ask your own self, right? That is your business in a headwind or a tailwind? See, are you having that advantage of a tailwind, or you are fighting a headwind for success, So as much you reduce your friction to get your revenues and scale, that is much better. Or you should have tons of money or resources, like for example SoftBank, right, to have billions of dollars to create a category. Then it's fine, you can work across against a headwind. But idea is most of the startups don't have that much resources and time, so it's best to find a tailwind, businesses with tailwind, right? So start a business where you can get access to customer easily. This is one learning, if I can leave with you guys, this is one learning which I want to leave with you. Do the business only where you are able to get access to customers very easily. Next, one can always feel the product market fit is happening or not happening, right? You will, when the product market fit is there, you will be able to see across your success. You will be having sales growing, the, press is writing about you. And if it's not happening, that, there's no action happening in your end. Kind of. So let me share some couple of real-time examples. Like for example, I was an investor in a company called Paytunes, where we used to have this free app to download, and we would pay the user on the jingle play, where it never scaled up because the product market fit was not happening. And we invested into a company called Nourish in our class one, where there was huge amount of tailwind because of pandemic, which helps. So Nourish helps building online academies, and the business just scaled up rapidly. So exactly when the product market fit is happening or not happening. So there would be growth. So many times there are growth, but it does not mean that product market fit is happening. And let me give you an example: difference between growth and a product market fit. Right? So for example, I'm investor in a company called Coolberg, right, which is a non-alcoholic beer company. Now the company, when we invested into, was distributing Coolberg in 17 states. So we were like, wow, kind of, and when we worked across, we could not find whether these are repeat sales or only the first time new customers are happening. So growth can happen with new customers, but there is a churn. You are not getting repeat customers. So what we did was we focused on initial 300 outlets of Coolberg, where we focused and checked across the repeat sales, right? How many times the same outlet, more and more, it was scaling up. Is this where your existing customers are buying more, right? It's not that new customers are just adding up and your old customers are leaving away, right? You may get initial growth, but end of the day, it will fall flat. So you will see many products which grow very rapidly initial times because people are trying first time, but then they drop off or churn or leave the product or uninstall because it does not provide value. So how do you create that retention is going to be very important. This is in nutshell. I'll just wrap up quickly so that we can have a Q&A. In case if you are a startup looking to raise fund, you can send us your investment proposal on pitch@100X.VC. We are based out of Mumbai, but we invest across India, and we have got founders across India, be it Delhi, Bangalore, Calcutta. So you can Google us and see our portfolio kind of stuff. Thank you so much. Ashish, we can have questions.
Sure. Thank you so much, Mr. Sanjay, for this insightful session. I hope it was very useful for everyone who is here today. So we have opened the chat, so you can feel free to put your questions if you have any directly in the chat, and I'll pick up and share it with Sanjay. Or if you want, you can raise your hands and we'll allow you to come and unmute yourself and share the questions. Meanwhile, I could see while there is a lot going in the chat, I could see a couple of questions being asked some time back. So I'll just start with those. So one of the question, and I also know that you covered it in your one of slide as well, that how to get, so investment is, I can safely say that investment is a proportion of your team or the quality of your team, right? So how to first get a solid team, and then if we have a solid team, then how to maintain that team. So I know it's a bit of the investment side, but that's a key element of an investor's perspective while they look forward to investing, and to sustainability as well. So what are your thoughts on hiring a good talent and then maintaining that good talent?
So my take is, this is all about going to founder's charisma, right? The person who has started this, is he able to build something which is valuable, and is he working for a purpose, and is he able to convince the other guy about the mission, what he's doing across, what is the larger change, what is that big story or a vision which the founder is having across. If that he can rub on the other co-founder or potential co-founder, chances of that founder conversion is very high. And that's why if you see into many of the VCs, they like to invest in teams, not a lone ranger or a single founder. Because entrepreneurship is not like you as a single person becoming a Superman and saying that I can do everything, right? You need to have team, you need to believe in other team members, and split responsibilities. Another is, many times you may have a vision, but the way you articulate, way you communicate, how you do it is everybody can share across, right? This is the work which you want and how you should be doing it. But why you should be doing that work is very important, right? If you can explain to your investors, to your co-founders, your team, why the current task is very important, why keeping your customers happy is very important, why doing the product right way is very important, right? So all these whys are going to be very important. Most of the time, entrepreneurs make mistake of just talking about execution. And what is the reason of doing it? They don't tell. While they have a clear-cut understanding, but they are not communicating it, right? So the why is very important. That's
Sure.
why if you look into it, my first question or my first slide is why you are building this company, right? So if you go back, I mean, this is the first stuff which you need to answer across yourself, so the first question, what is the reason of your company's existence? Why are you building this company? It's very, very important.
Right. So another interesting question that is popping up in the chat box is like, how has the investment landscape changed after the pandemic? And specifically when it comes to you who like evaluate businesses day in, day out, what are the key things that you're looking for now, which you have never thought of before, or what are the key red factors currently which you're looking for in startups?
So one of the things which has changed is a lot of the offense round, which is like big rounds which were happening across $2 billion, $1 billion round. All those offense rounds are out. Everything which is happening right now is defense rounds, which means to build a business, a sustainable, growable business. The business for VCs is as usual. There is no change. And personally at 100X, our learning in the COVID time was we wanted to announce our, class 2 sometime in March after our December. And we could not because our focus, idea is your first right is with your existing portfolio, where your portfolio takes, your first focus, your first time, because they are already funded company. Rather than be looking out for new opportunities, I would like to see the current existing invested portfolio right. So we took a pause for a month or two before we started. So that's why our class 2 is delayed kind of stuff. But what we learned over while we invested in this class 2 set of companies is how to invest remotely. In this class of companies, we have not met founders. And it took, usually for us to close a deal, it would take around 2 to 3 meetings, and it's very quick over a closure. In this Zoom meetings, it took us 8 to 10 times, right, while we did online, closure. So building a trust, building a, your capabilities to engage with VC as a founder requires much more effort than what it would have been in the physical time. Because there you are able to show your body language, your ability to engage, assess is much better. Your efforts are less. In selling yourself online or pitching to VCs online, it is tough for entrepreneurs. So you're learning on how do you prove yourself online is very, very important. So there is a way to engage across. There is a way to. So for example, let's say a couple of tips, right, which I would like to leave across. When you are meeting in person, the conversation can go all over, right? You can change your conversation in multiple ways. But when you are online, there is a fixed engagement. There is a fixed window. So you should be prepared across for all the things immediately, right? You can't have saying that, give me 5 minutes and I will come back to you, right? The 5 minutes of interval, which means the meeting is broke. Whereas that thing could have happened across in an offline one. So many things which you need to learn across, but we have been successful. We'll announce our class 2 finally, and class 3 is also open. So in case somebody wants to invest, happy to look at their deals for class 3.
Thank you so much. Next up, I see that Harshit has raised his hand. So Harshit, I'll be unmuting you if you are around. So please feel free to answer your question directly to Mr. Sanjay.
Yes, hi. I hope I'm audible.
Yes.
Sanjay sir, I had a question. What to do, for example, if my product doesn't have a really good moat, and especially if my product is we are catching up with existing solutions. So if I'm allowed to go very specific, it's an edutech product where the teachers can teach online a very good competitor and education focused version of Zoom, where chat and files facility or everything is available. What to do in this case where I think the market is huge enough, but I don't really have a good moat. For example, I would not be able to keep up with the features and the market of Class Plus, which I think is a very good big competitor for me.
So you should build across, unless you have a moat, unless you have an unfair advantage. This is a very competitive space, and you will be lost out. So if you look into in any business, there would be when a startup will start across or any trend, you will see long tail of startups which gets generated. But finally, there will be one or two or maximum three startups which will get large chunk of funding, and rest of the guys either fold up or they merge into the bigger ones. But typically it's always going to be maybe two or maybe three people, three startups which would be working across. So that's how it works.
Thank you so much, Mr. Sanjay, for taking out time from your busy schedule and coming and enlightening us, all of us, with the key aspects related to fundraising specifically. I, on the behalf of everyone present on the call today and each and every volunteer of Head Start, thank you so much, and look forward to have you on other sessions as well that you're organizing.
Thank you, Ashish. Thank you, Priyanka. Thank you, Head Start. And guys who are listening, thank you for a patient hearing, and look forward working with you. The email ID is pitch@100x.vc. Thanks.